Good morning, afternoon, or evening, traders, wherever you're logging in from. Welcome to SSFTG, where we trade everything from futures to metaverse real estate. If it moves, we trade it. Hey there, John Henry here, SSFTG. Welcome to the market review, recap, and forecast. If this is your first time here, welcome, my friend. A quick review before we jump on in. The first thing that we take care of and take a look at is the news and some of the things going on for the day ahead of us, as well as looking at the patterns that took place the day before, right? The previous session. Along with that, we're going to be going over all of the different patterns, and those rules are going to be the ones that are outlined in the VIP outline trade plan section in the live trade room links area if you need more info on those setups. Once we have these setups out of the way, then we can move on to the broader market context, the 60-minute charts, the 15-minute charts, and give us a little bit more of an expectation of what to go into tomorrow with. As far as tomorrow's news announcements, we have, there's a decent amount of news announcements going on. One of the first things, at least as far as large news announcements are concerned, are the core PCI, that was an interesting one, CPI rather. The core CPI for March, the forecast is 0.5%. That was also the previous at 0.5%. At 12 o'clock, we have the EIA short-term energy outlooks. That is a big mover for the energy sector. And that's really about it. We go into the afternoon session with not a whole lot else going on. We've got FOMC member Brainard speaking at 12:10, 10-year notes at 1300, and federal budget balances at 1400. There's really not a whole lot going on from the news side of things that at least is expected beyond 8:30. So with those out of the way, looking at the index markets as a whole in the broader spectrum, I know my head is in front of the S&P, but all of the index markets, the top left, the bottom left, and the middle top, they're all down. We've got the NASDAQ, which is down 2.26%, the S&P 1.64%, and the Dow 1.1%. Going even broader across gold, that one ended up 0.61%. Crude oil down 3.13%, and Bitcoin currently hovering. They're not doing well either. They're getting beat up pretty badly. From the NASDAQ's perspective, generally speaking, we have that major trap that took place on the lows down here. And after that reversal on the lows, which obviously that was a reversal, it went screaming all the way up into the highs. Now, once it made that high, if we go backward just a little bit here and kind of scrunch this up, we can see what this high was. It was a challenge of that major swing back in early January. And, well, they didn't exactly win any fights. They tried breaking above the highs. It failed into a lower high. They couldn't even make it back up there. And where's our three lower highs, right? Our three pattern lower high is one of my absolute favorite ways to short into. And it was so bearish, they couldn't even get back up there for another one. Maybe they do have another rally back up to get it again. But all things considered here, that was a pretty spectacular failure off of those highs that accomplished basically nothing aside from trapping the bulls on the top. If we look at more recent price action going on with the NASDAQ, we've got a continuation and a moving average cross lower. So as far as patterning is concerned, we have an L5 off of the top. Let's load that up really quick. Got the L5 off of the highs, which means that we're looking for a continuation phase to the downside. And realistically, the sellers kind of got it. They had their L2 phasing, which took place right inside there. But if we zoom in really, really close, they technically missed it. It didn't actually hit. So that may suggest that sellers have another shot at trying to drive the market down. Whenever we have this big of a move down, though, we always have to ask ourselves, where did we come from? Right, if we measure from the bottom all the way to the top in terms of order flow, it'll give us an idea as to who's stuck and from where. Once this loads up here, we'll give it a second. All right, there we go. And then we've got the volume loaded up, which is at 14,625. So in terms of this short area, not only is it a short area, but it's a re-up of an earlier short area where sellers were in, got stuck a little bit, and were finally given some profitability. They redefended, shoved the market back down again. Pretty aggressive, right? Now, if we're looking at the overall context for the bulls case, then really we should see some bullish momentum back to the upside where the algo swings are anticipated to come in. They're not expected to come in until a little bit lower, at least not until 13,688. And that's not going to show any kind of support until 688 to, let's see here, right around 501. 501.75. That's going to be the larger, broader zone of support where we could anticipate possibly the bulls coming back in to push the market back higher. Otherwise, we're kind of stuck waiting, and the market's falling pretty aggressively. It's not very realistic to assume that the bears are going to stop anytime soon. The S&P is next up, which again gives us a negative 1.64%. This feels a bit better in terms of those 3 lower high patterns that we love seeing, but still incredibly aggressive. We started off with a wedge down at the base. That wedge false breaks the low and then goes screaming on up through the highs. Here is the previous swing high, which looks a little bit better comparative to the NASDAQ at least, but that's really about it. And then they come falling right back down underneath. And if anything, when the market came back to retest as resistance, that's not going to help anybody. Looking for more continuation down seems to be fitting the bill, and those are happening in measured move pulses. This last move down has almost completed its 3rd leg to the downside, and if we coincide that with the fact that this whole move off of the lows is coming in off of an L5, so we have an L5 off of the base, that means that bulls will be looking for an L2 continuation, and that is basically right inside of the zone where we are now. Now, we're at the lower portion of it, to be fair. The bulls are losing a bit of their fight here, but if we can rotate back up again, they've got a good shot at catching a V-bottom, reversal all the way back to the highs. The issue is if we start breaking too much further underneath this lower portion of the L2, the bulls are going to lose their grip. We'll probably view this area up here as more resistance then, with the earlier bulls getting out at break even, and then a rotation back down towards new lows. The Dow is next with a little bit of a... this definitely looks a lot better. Beautiful patterning on the highs. This very much looks like a flag pattern, if anything, and the flag might have even had a false break low. There's a decent amount of support here on the Dow that's trying to hold the market up. That said, they haven't made any new highs, and they're certainly not winning any fights. So if we do even re-challenge back up to the 34,800s, it's much more likely to be resistance at this point in time, until we can get some actual proof. If the market is able to migrate back above that, we've got a very good shot for a continuation phase to keep things going. But looking at the current structure of things here, this is still maintaining a bear trend. We've got the earlier move over here, lower high. This fits, and if we go back before that, it's continuing a previous bear trend. So we've got to break not only a little bit further up, break some of this bearish structure, etc., but we've got to break this previous major swing. Until then, we don't have any proof that the bulls are actually accomplishing anything. If the buyers are going to be coming back in, again, from a patterning perspective, the low gives us an L5, almost an L6, but it just missed it. We've got that L5 off the low with a continuation back up. Generally speaking, they're looking for an L2, and we are finally pulling back to it. And guess where we are exactly on top of? We're right back on top of the L2. So with this type of patterning, this is the anticipation. This is what you expect. And the bouncing here has been no joke. But these 3 lower highs are concerning. If we start losing the low, this could quickly reverse, and all of a sudden, before you know it, we're all the way at the low again. Then there's always gold, and gold is a little bit of a funny one. Obviously, we've got that $2,000 range right at the top of the basic neckline that kind of set up here. And now we're back underneath it. Obviously having a little bit of difficulty. The market tried breaking above that last swing high. Total failure there. But before that, it also tried breaking lower, and that was a total failure. We're not really accomplishing anything either way, and if we extend this out a little bit further, we can see that this may be a megaphone. This top that's setting up here could be a false high before a really strong blow off top to get back up towards those megaphone highs. And not only that, but to retest the $2,000 range and confirm the earlier trap that took place at the low. There's a lot riding on a possible continuation move to the upside. If we look back at the previous leg up from the bottom all the way up to the highs, that's not what I wanted. All the way up to the highs, we'll get the order flow on here and get it so that we can see what actually happened on this rally higher. And this paints the clearest picture we could possibly ask for. The earlier traders who were trying to go in short for whatever reason back in those 1900s, well, it didn't work. They realized they were wrong, and they've been getting out at break even ever since then. They haven't stopped. Once again, adding more context to the bullish side of things. All we need is a little bit of a breakaway to get out of this funk, and if we look at the current volume from the lowest point down here to where we are now, that'll give us a better idea as to how the market's responding, and we're already starting to see signs that the bears might be getting left behind. This is starting to look, I know it doesn't look like it off that most recent high, but the bulls are really starting to gain some ground here. Crude oil is probably the definition of descending wedge. I mean, where do we even start this thing? It hasn't stopped declining all the way down here. In terms of the overall bearish momentum, obviously the market is, again, falling lower, and we're getting more and more descending in terms of the point of it getting pointier. Originally, it was a little bit more angled like this, very broad, and now we're starting to angle down a bit more. And it makes sense. The buyers tried breaking above the $100 mark, and it didn't work at all. Total failure. That is a crazy decimal. They tried breaking above the $100 range. Didn't work. I mean, if we're looking at risk, the most risk that they would have put on is down to like the $91 range, 91, 94, with a continuation back up. And if we look at the risk reward off of that, it's hard to argue with the fact that we have scalpers coming in, we have 1-to-1 traders coming in, and we have a monstrous response at 2-to-1. The bulls didn't need to break all the way up to new highs to get 2-to-1 objectives. They already kind of finished it, assuming that they used actual risk down to the lows. If they got greedy and were looking for more than actual risk, then they're probably still long waiting for a continuation back up. Then they might be a bit underwater and not feeling too good, right? But otherwise, I mean, the bears are kind of in control, and we've got the more recent rotation down, suggesting that we've got an L3 into an L2, and now we're back down at the low. That's not good. When you have an L1, 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 you want to keep seeing those. Not L1, L1, and then we've got an L3. Cool, we should have an L1, and then it goes to L2. It's disappointing. And when there's a disappointing response, when the market returns back down towards those extremes, well, it's usually disappointing there as well. It's a good sign for the possible bulls to get it going back up. But for right now, I mean, the bulls aren't winning any fights. We've got perfect head and shoulder structuring. We've got the bears continuing to drive lower with lower highs all the way across. Even if the bulls do rally up, the first rally up's probably going to be a trap. We're going to have a really hard time believing any bullish sentiment right now while the market's stuck here. And then over on Bitcoin, which is catching an absolute dive down into the 40,000 range once again, big pullback here. If we're looking at the structure, right, looking at the structure from the bottom all the way up, we've got a nice little L4 bounce continuation hold. An L4 bounce usually should see an L1 continuation on a new high. We broke above a new high. We have the L1, kinda, and with that disgusting L1, you have a disgusting response. That's what you expect. When the market doesn't do what you hoped it would, then generally people get fearful. They start jumping ship. They start diving out of the trade a bit earlier than they might have otherwise, and you have this lackluster response which rolls all the way back down. Now we're all the way down to L4 territory once again. It's the same spot that held before. We are having some pretty good bearish momentum crossing to the downside, and obviously we have a tough time believing the bulls. So with that context, we can see the bears also demonstrating an L5. After an L5, you expect things to pull back a little bit deeper, usually more along the lines of an L2, which we ended up not getting yet. These have all been L1s, which means that we have an open or naked L2, which is waiting to get tested on a little bit of a bigger pullback. Really, the big thing that the bears have going for them right now are that the bulls don't have any reason to support this yet. Well, I guess that's all they need. If there isn't anybody buying, then I guess everybody's selling. The only zone of support that we really have would be back down into the previous structural support zone in the 38,000s to 37s, and we'll have to wait and see if the bulls want to show up to the party there. Otherwise, it's going to have to dive a little bit further and find some better support, because here, it's not it yet. All right, well, that's going to do it for this overview for tomorrow's session, and kind of gives us an idea as to what to expect going into the next day ahead. We've got a lot of areas of resistance that we're going to keep an eye on, a lot of zones of support that we can keep an eye on, and some other areas that require us to be a little bit more patient and let the market kind of develop a bit more. Of course, if you have any questions, feel free to shoot me an email, jhb@ssftg.com. But until the next one, enjoy, have a fantastic trading day, and we will see you all in the next one. Thanks.